Hey, this is Craig Ferrantino of Craig James Financial. Get ready for another financial report right here on 103.9 LI News Radio.
Discussions in this show are for educational purposes only. The views and opinions expressed are based on current economic and market conditions and are subject to change. Securities and advisory services offered through United Planners Financial Services, member FINRA, SIPC. Craig James Financial Services and United Planners are not affiliated. United Planners and its representatives do not offer tax or legal advice.
Let's not forget that website, folks, CraigJamesFinancial.com. That'll be info that we discuss on this segment. You can't get anywhere else. But also, you log on and get ready for all the great webinars and events that come our way. CraigJamesFinancial.com. Dow with an excellent finish, up 432 on Friday's close. Excellent week as it ends over 43,000 as your starting point. That's right, 43,819 to be exact. And futures right now up over 200. We'll keep an eye on that. Lots happening. The back and forth as far as the Fed chair is concerned and the administration, Jerry Powell and Donald Trump, keep going at it. Lots happening. That big old beautiful bill, that debate will ongoing in the Senate as far as today, this morning. In just about an hour and a half, we'll keep an eye on that as that bill looks to advance for a signing by the president by the 4th of July weekend. Let's see if that happens. As we welcome back from the West Coast, this is Craig Ferrantino from the great Craig James Financial Services, located right in the heart of Melville off of Broad Hollow Road. Great having you back, my friend. How are you?
Good morning, Jay. It's great to be back, my friend. I am telling you, you give such a great introduction. I do not need to talk. Let me, if I could, if you allow me to just fill in a few little gaps here, but it's very, very good.
You may continue.
Started. No, it's great. I mean, the S&P, it's all good news, too. I remember a week ago, Jay, I said, we're going to get a rubber band. Remember that? I said, you're going to see a snap here. And a week after I predicted that, we saw a snap where things are looking very, very positive. Today's the last day of the quarter. This is June 30th. And we saw the S&P 500 reaching new record highs, up 8 from the April 8th low of 23%. And we have a lot of information. But, the first thing I want to point out is that not reported, this is the fastest turnaround of the markets from a 20% plus deficit. We did it in 79 days. 79 days. Write that number down, Jay. 79 days. That is critical because historically, since 1929, again, I don't know why, nobody's reporting this. Since 1929, there has been the average turnaround time from a 20% deficit has been 2 years. 2 years. So we did it in 79 days, and that, to me, that's amazing. Let's look at where we are year to date. We like to do this on Mondays. Since January 1st, Dow Jones Industrial Average year to date is up 3%. It's in positive territory. And the S&P 500 index up 5% since January 1st. NASDAQ up about equally 5%. The European index was up to 18%, now down to 16.2% since January 1st. It would have sat in Europe for years and not seen any growth in this year, I guess due to defense spending and some of the companies involved in that, the forced defense spending by the president to these NATO countries, I think it's really lifted their economies quite a bit. So 16.2% for the European index. 10-year Treasury at a 4.28. That's great. I mean, that came down from a 4, even a 4.5. We may be seeing that trend lower, which will make mortgages more affordable. Oil, we're down 9.2%. We're at $65 a barrel. Bonds at $98.80. Gold is still higher, about $3,300 an ounce, $3,300. In the turnaround from the peak to trough to peak again, what's pulling us out? We see information technology doing very, very well. Communication services, industrials, that's your classic rebuilding the country, up 26% peak to trough there. Consumer discretionary about 25%. Not participating so much is healthcare, consumer staples, energy, obviously, real estate, utilities, and we'll see that start to turn. We'll see how the trend is by sector. Very important to know its sectors. If you're listening to me and you say, geez, I'm missing out here, please give all of us a call, 631-393-2888, 631-393-2888. We have some great strategies going forward for all your listeners, and we certainly want to talk about that. The travels have certainly shown. I was in, Jay, part of the week. Last week I was in beautiful Steubenville, Ohio, which is really on the corner of West Virginia, Pennsylvania, Pittsburgh, and Ohio, and home of, by the way, Dean Martin. But every time I visit that area, I get to see what Middle America looks like. And I'm telling you, the natural gas of the hotel I was at, there was like 20 white trucks in the parking lot. And I was like, who are you? And basically, these are all natural gas workers, and they had temporary housing in this hotel I was staying at. And they're there. They get the whole third floor, I think it is. And those guys are going, and guys and girls come in on a regular basis. And there must be shifts or something, but they're working at some natural gas facility nearby. We're drilling, and that's what's happening. And it's good to see the economy there in a sort of a depressed neighborhood, including Weirton, West Virginia, and I see the outskirts of Pittsburgh starting to really show some light. So it's very exciting to see, and I think that's going to play out in numbers in the future. So, guys, if you're not in it, you can only be in it to win it. That's the way to go. And we're talking about investing. There's an interesting story here. There's Kentucky Fried Chicken. I just want to talk about this for a second, Jay. The Kentucky Fried Chicken. It was the third largest chain in the United States. Chick-fil-A, which is a privately held company. Kentucky Fried is KFC. That's a public stock. The KFC has been displaced to the number 3 spot. Popeyes is number 2. Popeyes also right in there. I didn't know that Popeyes did better business than Kentucky Fried, but it does. And so at one time, KFC was owned by Pepsi, as a matter of fact, not too long ago. So, but its own stock. But they got seeded by this Raising Cane's. I don't know if you heard of it.
Oh, yeah.
Have you heard of them? I think there's like one in Brooklyn.
I've heard of it, and I got to tell you, I've eaten there, and I'm not impressed. But it's a hot commodity because Chick-fil-A is getting a little competition. But I really don't see all the spark about it. I really don't. I didn't like it at all.
So it was ranked 28 of all restaurant chains in the United States. Now it's ranked number 18, but it just displaced Kentucky Fried Chicken for the coveted number 3 spot, and who sells the most chicken. So very interesting on your make sure. But they're also a private company, but they're arguing that they have a very simple menu, and it's a sort of a crowded space. Taco Bell even has some chicken, McDonald's has some chicken, and Wendy's has some chicken. So it's very interesting on how they've come out very, very different, and how they got so fast. They've grown so fast. But I think they have crinkle cut fries, coleslaw. I know it's breakfast here, but we're talking about these things. So I'm trying to figure out, what did they do to come to number 3? And maybe there's something that's a wake-up call for Kentucky Fried. You may see an activist investor jump into KFC and say, hey, what are you guys doing? We're losing market share quite a bit to this Raising Cane's. So I thought that was an interesting story. Clients now, we're coming into the summer. Very, very important. Second quarter, we want to make sure we look at our 401ks. We'll be getting statements in the mail. If there's something and 457 plans and 401ks, 457 and 403bs, if you're a teacher or some hospitals have 403b plans. If you don't like what you see, please give our office a call, 631-393-2888. If you're not happy with your investments, give our office a call. We'll help you with a repair strategy as we plot through the next 6 months of this year. Let's see if we can continue in this positive territory, Jay.
Excellent job, my friend. I'll tell you why they catapulted, because of their marketing. They had a huge campaign, and Kentucky Fried Chicken, as long as they have been around, remember the old Colonel Sanders, and they had his wife do the commercials and everything else? Well, they really have not had any type of spark over the last couple of years, and Cane's has been up there. They have a fierce campaign. They were battling in many, especially where I live, Chick-fil-A. The lines were as long as could be. It's died off a little bit, but really their marketing was top notch, if you ask me, as far as being, over Kentucky Fried Chicken. So maybe the reasoning, who knows? Maybe the reason. But I'm going to tell you right now, the food is, I'll take Kentucky Fried Chicken any day of the week as far as what they got to offer, food-wise. So, anyway, that's my 2 cents in. Folks,
that's great.
Craig James, ladies and gentlemen, CraigJamesFinancial.com. Remember the website. And also remember, with all of the great webinars and events that will come our way in the month of July, check it all out. CraigJamesFinancial.com. Good to have you back. And we will chat with you on a Tuesday. How's that? First of the month.
That's correct, Jay. We'll talk tomorrow. Have a great day, and we'll be in touch.